Subscribe to my channel Report Stock.
Okay, let's unpack this. Welcome to the deep dive.
Glad to be here.
Today we're plunging into the recent Q2 earnings report for FUFU Inc., ticker symbol FUFU.
Yep, FUFU.
Our goal for you today is to slice through these numbers, really see what pops out, and most importantly, figure out what can be coming next for FUFU.
There's definitely a lot to talk about.
We've got a stack of fascinating sources here, and some of the details are genuinely surprising. So diving right into the recent Q2 report for FUFU, what was the absolute standout detail that grabbed your attention first?
Well, what's truly fascinating, and maybe a bit surprising right off the bat, is that FUFU Inc. came out with quarterly earnings of 0.09 cents per share for Q2 2025.
Okay, 9 cents.
Right. And for clarity, when we talk about the Zacks consensus estimate, that's basically the average forecast from analysts covering the stock.
Gotcha.
FUFU actually beat that estimate of 0.06 per share by a pretty wide margin.
How wide?
That's an earnings surprise of a staggering plus 50.0% for this quarter.
Wow, 50%.
Yeah. And just to put that in perspective, a year ago, they only had earnings of $0.01 per share.
Just a penny.
Just a penny. So that's significant growth on the earnings front. Definitely a big positive number.
So a 50% earnings surprise, that's like expecting a decent dinner and getting a gourmet feast.
Yeah. Yeah, something like that.
But then the revenue story is, well, less appetizing, isn't it?
Exactly. That's the other side of the coin. While the earnings per share were a definite win, the revenue picture tells a different story.
Okay, how so?
FUFU posted revenues of $115.4 million for the same quarter, but they actually missed the Zacks consensus estimate.
Missed it. By how much?
By 6.69%. And not only that, these revenues are down from $129.42 million a year ago.
Down year over year, too. Ouch.
And it's also critical to note the company hasn't managed to beat consensus revenue estimates over the last 4 quarters. It's becoming a pattern.
4 quarters of revenue misses.
Right. So you have this classic head-scratcher.
Yeah.
A strong earnings beat, but a revenue miss.
That kind of divergence is always intriguing. So an earnings beat alongside a revenue miss, quite the classic head-scratcher, as you said. What are some of the common reasons for that kind of split, especially, for a company in financial services?
That's a crucial point, and it's definitely what analysts often zero in on. When you see an earnings beat but a revenue miss, it can signal a few things.
Like what?
Sometimes it's down to really aggressive cost-cutting, That boosts the bottom line, the profit, without necessarily growing the top line, the sales.
Okay, makes sense. Squeezing more profit out of less sales.
Exactly. Or other times it could be things like one-off asset sales, or maybe a strategic shift in focus toward higher margin products.
Ah, so selling stuff that makes more profit per sale, even if overall sales are down.
Precisely. Profitable, maybe, but might not reflect robust underlying sales growth. It really raises questions about the quality and, importantly, the sustainability of those earnings.
Right. Is it real operational improvement or just kind of financial maneuvering?
That's the question. For FUFU, it certainly warrants a closer look at their operational efficiency versus what's actually happening with market demand for their services.
And to add another layer of complexity here, it wasn't exactly a clean sweep on the earnings front in the recent past either, was it?
No, not at all.
While this quarter's earnings were a pleasant surprise just a quarter ago, it was expected that FUFU would post earnings of $0.04 per share.
Right, that was the expectation.
So they actually produced a loss of $0.10, a 10-cent loss.
Yeah, quite a swing.
That delivered a significant negative surprise of negative 350%. 350% miss to the downside.
Huge miss. It really highlights the volatility.
And across the last 4 quarters, the company has only managed to surpass consensus EPS estimates 2 times. So 50-50 on earnings beats recently.
Correct. A very mixed track record lately.
This kind of mixed bag always makes you wonder how the market is reacting, Let's shift our focus to the stock's performance this year. Has it reflected that big Q2 earnings beat, or are investors maybe more focused on the revenue miss and that earlier Q1 loss?
That's the million-dollar question, isn't it? And the market's reaction seems pretty clear. So far this year, FUFU Inc. shares have lost about 19.8%.
Down almost 20% year to date.
Yeah. And if we place this in broader context, that's quite a contrast to the S&P 500, which has actually gained 10% in the same period.
Wow, okay. So a nearly 30% underperformance relative to the market.
Exactly. This suggests the market is clearly reacting to more than just this one quarter's earnings beat. There are bigger concerns likely around revenue and consistency.
So for investors, the big question, of course, is what's next for BitFuFu Inc.?
Always the key question.
While there are no easy answers, you mentioned one reliable measure that can help shed light on this is the company's earnings outlook.
That's right. This includes the current consensus expectations, what analysts are forecasting now, and crucially, how those expectations have been changing over time.
We've seen the stock's underperformance despite that Q2 earnings beat. You mentioned earnings outlook and estimate revisions are critical here. How strong is that correlation really between those revisions and near-term stock movements?
It's remarkably strong, actually.
Really?
Yeah. Empirical research shows a significant correlation between near-term stock movements and trends in earnings estimate revisions. It's one of the most powerful forces driving stock prices in the short term.
So basically, if analysts are upgrading their forecasts, the stock tends to go up and vice versa.
That's the gist of it, yeah. And in BitFu's case, this is where it gets quite interesting. Ahead of this earnings release, the estimate revisions trend for BitFuFu Inc. was actually unfavorable.
Unfavorable before this report, despite the beat they just posted.
Yes, leading up to this report, analysts were already lowering their expectations, and this current status translates into a Zacks rank #4.
Okay, Zacks rank #4. For our listeners who might not track Zacks rankings every day, what exactly does a sell rating like that from Zacks signify? Why is that particular ranking important to watch?
Good question. So the Zacks rank is a proprietary system. It heavily relies on analysts' earnings estimate revisions, basically, tracking how analysts are changing their future profit forecasts for a company.
Right, the changes matter.
Exactly. And #4, which is a sell rating, indicates that analysts, as a group, have been significantly lowering their earnings estimates for BitFuFu recently.
So the pros are becoming more pessimistic about future profits.
That's what it signals, yes.
Yeah.
An expectation of underperformance relative to the broader market in the near term, maybe the next 1-3 months. It's essentially a data-driven red flag reflecting a negative shift in professional sentiment.
Okay, that's clear.
Of course, the magnitude and direction of these estimate revisions could change following this just-released earnings report. Maybe this big beat turns some heads.
Right, this report could shift things.
We'll have to see. It'll be interesting to watch how estimates for the coming quarters and the current fiscal year change in the days ahead. Just for context, for the coming quarter, the current consensus EPS estimate is 7.07 cents on about $149.8 million in revenues.
Okay, 7 cents EPS next quarter.
And for the current full fiscal year, the estimate stands at 0.140 cents on $521.34 million in revenues. We'll see if those numbers move up now.
Got it. That context about the stock's potential future clarifies the immediate market sentiment. But looking beyond those individual company numbers, let's zoom out a bit. Let's consider the broader environment BitFuFu operates in. How much does the industry backdrop play into BitFuFu's situation, especially when its own numbers are, well, a bit of a mixed bag?
Well, it plays a substantial role. You can't really evaluate a company in a vacuum, right?
Definitely not.
So BitFuFu operates in the Zacks financial miscellaneous services industry, and this industry is actually doing quite well currently. It's positioned in the top 22% of the 250-plus Zacks industries.
Top 22%, that's pretty strong.
Very strong. Our research consistently indicates that the top 50% of the Zacks rank industries actually outperform the bottom 50% by a factor of more than 2 to 1.
Wow, 2 to 1.
Yeah. So while BitFuFu itself is showing these mixed signals, maybe even struggling on the revenue front, they are operating within a very strong industry tailwind. That's an interesting dynamic.
A strong tide lifting.
Yeah.
Well, maybe not all boats equally in this case.
Something like that, yeah. It adds another layer to the puzzle.
And just to give you another perspective and maybe some context from within that strong industry, one other stock from the same sector, XP Inc., ticker XP, is actually yet to report its results for Q2.
Ah, XP, right. They report soon.
Yeah, their results are expected on August 18th. What are the expectations for XP Inc., and how might that contrast with BitFuFu's current kind of choppy situation?
Well, this comparison with XP Inc. is quite illuminating, actually. XP is expected to post quarterly earnings of $0.43 per share in its upcoming report,
43 cents.
which would represent a year-over-year change of plus 10.3%. Solid growth.
Okay, positive growth expected.
And what's also notable is that the consensus EPS estimate for XP has remained unchanged over the last 30 days.
Stable estimates, unlike FUFU before this report.
Exactly. It suggests stability in analyst sentiment. And on the revenue side, XP's revenues are expected to be around $834.7 million, up 3.1% from the year-ago quarter.
So XP looks like it has more consistent positive growth expectations across the board, earnings and revenue growing, stable estimates.
That's the picture, yes. It suggests a certain stability and perhaps a more predictable market reception. In contrast, BitFuFu's mixed signals that earnings beat but the revenue miss, coupled with the negative stock performance and that sell rating. It really highlights the market's underlying skepticism.
So it really underscores how different companies within the same strong industry can have vastly different investment profiles.
Absolutely. Right now, BitFuFu is appearing to be, let's say, a more volatile or maybe speculative play compared to XP Inc. Apparently more steady outlook.
Okay, that makes a lot of sense. So when you boil it all down, what does all this mean for you as someone trying to stay well informed?
It's a lot to juggle.
Yeah, we've seen that BitFuFu Inc. delivered a strong earnings beat this quarter, which sounds great on the surface.
50% beat.
Yet they also missed revenue estimates again and have seen their shares underperform the broader market significantly year to date.
Almost 20% down.
And this comes along with an unfavorable earnings outlook trend leading into the report and that Zach's sell rating.
Yeah, the headwinds were there.
Yet, as you pointed out, they operate within a strong industry sector, and their peer, XP Inc., shows much more consistent growth expectations.
A real contrast.
This really creates a compelling case study on why a single number, even a big earnings beat, never tells the whole story, and why the why behind the numbers matters just as much as the what.
Couldn't agree more. Context is everything.
So what stands out to you about these contrasting signals? Perhaps it's the reminder that a company's immediate stock price movement isn't just about the raw headline numbers.
Definitely not. It's also about the perceived quality and sustainability of those numbers, what management says, and crucially, how those future earnings expectations shift based on all the new information.
Yeah, the narrative matters.
So maybe consider how you might approach evaluating a company when the data presents such a complex, multifaceted picture like this, where a win on one front, like earnings, can be overshadowed by a miss on another, like revenue, especially when it's a recurring theme. Lots to think about there.
Subscribe to my channel Report Stock.